Hello everybody, I'm Jerry D'Ambrosio, Manager of Educational Content here with VectorVest, and it's my pleasure to bring to you this week's special presentation. Inflation fears, the expectation that the Fed will continue to raise rates this year, albeit possibly at a slower pace, and now to add fuel to the fire, this banking crisis that we find ourselves in really has weighed on the market over the last couple of weeks. The market has sold off sharply. Two of our key market timing indicators, the MTI and the buy-to-sell ratio, have gotten below their respective oversold levels. And when they do, we begin to search for a bottom. Now, how do we identify when the blast-off phase is underway and we can begin to get our shopping list ready and go bottom fishing? Today, I'm going to walk us through some steps that we need to take to help us identify when it's okay to go bottom fishing and start buying stocks again. So I'm going to hop us right into the VectorVest program, and we'll begin on a market timing graph. And as of the hard right edge, we can see that recently the market has sold off and the MTI had gotten to below 0.6. The buy-to-sell ratio still currently below 0.2. And yesterday was a great day. There was some news yesterday that some of the big banks, JP Morgan Chase, Morgan Stanley, Wells Fargo, were to give First Republic a cash infusion. That sparked a rally across a lot of the regional banks. Credit Suisse also received a loan from the Swiss National Bank. So really strong rally yesterday. The VVC closed up 1%. All the major indices were up at least 1% as well. I'm going to zoom in here so we can see what happened yesterday. The VectorVest composite did form what's called a bullish engulfing pattern. So these are the things that we look for off of the levels that these indicators reach. MTI below 0.6, buy-to-sell ratio below 0.2. One of the things that we keep an eye out for are these bullish candlestick reversal signals. Now, just on March 15th, that wasn't necessarily a hammer, but you can see the intraday reversals that the market went through over the last couple of days. Those types of intraday reversals do suggest that the market is trying to find a bottom. We wait for the blast off, which we got yesterday. Again, all the major indices finishing higher than 1%. But one of the things that we don't have today, and right now we're looking at about 10 o'clock Eastern time on March 17th, we don't have follow-through. We need follow-through in order to begin to buy stocks again and go bottom fishing. For follow-through of a bullish engulfing pattern, we needed the market to move higher than yesterday's close of $54.99. We needed that to happen today. Now, as of 10 o'clock this morning, it hasn't happened yet. Doesn't mean that it can't. But we do look for that follow-through. I'm going to take us back a little bit here, going back to October of last year, when the market bottomed out here in September. Now, we did get faked out in the beginning of October. Strong rally there on October 3rd. Great follow-through on October 4th. However, the rally petered out rather quickly, and the market began to retest the September low. And here on October 13th, let me zoom in a little bit closer. October 13th, you could see the market opened much lower than the previous day's close. Sold off a little bit during the day, but winded up rallying really nicely there and closing well off of the low and above the open of the previous day. That is the same candlestick reversal pattern that we see currently. It's called a bullish engulfing. Now, we didn't quite get follow through the next day. It's hard to tell where the market was at 10 o'clock in the morning on October 14th. We can see that it opened higher than the previous day's close, but closed well off of the high and near the low of the session. However, on the next day, October 17th, we did in fact get confirmation of October 13th's bullish engulfing pattern. If I put the primary wave on, that was the same day that the primary wave turned up. So when the indicators get to their respective oversold levels, again, the MTI going below 0.6, buy-to-sell ratio going below 0.2, we wait for the blast-off day. We wait for that sharp rally. Ideally, we want that rally to occur on some type of positive news. I can't recall what the news was back in October that caused the rally, but we look for some type of catalyst. The market rallied there nicely October 13th, followed through on October 17th, Primary wave turned up. You could see the MTI trying to claw its way from below 0.6 to above 0.6. That is a nice opportunity there to start picking up shares of quality stocks at a discount. I'm going to take us again to the current date and time where we see the same type of behavior that we saw back in October. Bullish engulfing, MTI below 0.6 just a few days ago here, buy to sell ratio below 0.2. We just don't have the follow-through day that we saw there on October 17th. Not to say that it can't happen today, but that's what we're going to look for. This is a very timely presentation, folks. Very rarely do we get to present a bottom fishing presentation right as the market is seemingly trying to find a bottom. So if the market happens to rally later this afternoon, moves higher than yesterday's close, that would be a good opportunity again to go bottom fishing, picking up some shares of quality stocks at discounted prices. If it doesn't happen today, like it didn't happen the following day on October 14th, let's see what next week has in store. Let's see what Monday provides for us. If the market moves higher than yesterday's close on Monday, that would constitute confirmation of yesterday's bullish engulfing. In fact, if I go to the home page and look at the color guard here, very likely, now right now the primary wave is down. We have a red light in the price column of the color guard. VVC is at 54.61. 5 days ago it was 54.81. Look at what the price of the VVC was at Monday of this week, 54.42. Well, we're already higher than that VVC price there this previous Monday. So with an up day on Monday, not only will we get confirmation, and really we want the VVC to move higher than the close of the 16th. That would constitute confirmation or follow through of the bullish engulfing. But the primary wave will turn up as well, just like it did there on October 17th. So those are the things that we are going to look for moving forward. Stay tuned to the daily color guard report on Monday. If we don't get follow through here today, if we get that strong follow through on Monday, we will let you know that it is okay to begin getting your shopping list ready and going bottom fishing. Well, what does that mean? What types of stocks should we be looking at? For the purposes here, I'm going to take us back to that October 17th confirmation day off of the bullish engulfing pattern, off of the October 13th low when the MTI was below 0.6, buy to sell ratio was below 0.2, and the primary wave turned up there on October 17th. So I'm going to go into the Unisearch tool. I have my date here at the top set to October 17th, and there are two types of bottom fishing campaigns that you might consider. I'm going to open up our searches bottom fishing folder. Now there's the jailbreak scan, there's the Pirates long scan, there's the bottom fishing and rising industry scan. Now these searches find beaten down stocks with pretty good upside potential. A lot of these names, if I go back to jailbreak here, if I run the scan as of that day, a lot of these names we're not so familiar with. They're very low dollar stocks, which some in this type of market environment might not be too keen on trading. If you plan on being a little bit more risk averse, I'm going to lean a little bit more towards these bottom fishing searches at the top. Best of the biggies, blue chip bargains, VST divided by RT, blue chip bargains / RT. These scans here find quality beaten down stocks: Nvidia, Adobe, Applied Materials, Charter, Tesla, Salesforce. Look at the upside potential on all of these. Look at the safety ratings, the relative safety ratings on all of these stocks. Some of them are overvalued, some of them are undervalued, but really it's the upside potential that we're going to pay attention to. All of these stocks, and again, we're looking back on October 17th of 2022 when the market kind of blasted off there from the October 13th bottom. All of these stocks have been beaten down in price pretty badly. Their RT ratings are below 1, and most of them have sell ratings as well. So if I were to quick test the top 10 stocks from the blue chip bargain / RT scan, and by the way, the sort here is RT ascending. Essentially, we're looking for stocks in the blue chip bargains watch list with the lowest RT ratings at the top. These are the stocks that have been beaten down the most in price as the market bottomed out there in the middle of October. If I were to quick test the top 10 just 2 weeks out, 9 winners, 1 loser, about a 10% return, while the VVC went up about 5%. So we doubled the performance of the market with blue chip stocks that have been beaten down quite a bit with the overall market. Another scan that you can consider, blue chip bargains VST divided by RT. Going to see a lot of the same names in here. If I quick test those, about 11% gain over the same time period in only about 2 weeks. Best of the biggies / RT. Look at the indicators or parameters that we're trying to search for here. Relative value, we need greater than 1.02. Relative safety, we need greater than 1. We need the earnings growth rate to be greater than or equal to 10%. And that list of stocks is also sorted by RTA ascending. And if I quick test those, again, about 11% gain over the same time period. And I only quick tested those folks for a couple of weeks because one of the things I want to leave you with here today is if you do decide to go bottom fishing here, if we do see the blast off phase once again, a bullish candlestick reversal signal of some sort, whether it's a bullish engulfing, a bullish harami, a one white soldier, a hammer, bullish engulfing, MTI below 0.6, buy to sell ratio below 0.2. By the way, if I add parameter, if I go to add parameter here, technical analysis, click on support and resistance, we find ourselves right at this support level here. A couple of support levels here, 54.61, 53.44. So a bullish engulfing, MTI below 0.6, buy to sell ratio below 0.2, right at support. Unfortunately, we just don't have follow through today. If we do get follow through over the next couple of days, primary wave will turn up, and that is, folks, your when to buy. That is going to tell you, folks, that it is okay to start buying stocks again, getting your shopping list ready, and begin to go bottom fishing. We still have these things hanging over the market's head, right? We still have inflation fears that aren't going away. We're only in March of 2023, so a few more rate hikes are likely in the cards for us here for the remainder of the year. Our ETI indicator, if I go to add new, change our graph here to a market climate graph, our ETI, earnings trend indicator, has been steadily falling really since April of last year. It's currently at 1.01. If the trend of earnings continue to suffer, and we're looking at the 50-day moving average of the S&P 500 earnings at the top, that earnings trend indicator will go below 1, and we will be in a full-blown bear market according to our method of analysis. The reason why I went out only a couple of weeks with those quick tests is because I want you to consider taking profits a lot quicker than you may normally would if all these things weren't hanging over the market's head. Those things aren't necessarily going away anytime soon. And if the ETI continues to struggle here, it will fall below 1, which would lead us into a full-blown bear market situation. So put yourselves in the position to go bottom fishing if we see follow through at all today or at all next week. Now, all bets are off if, let me take off the primary wave, if the VVC falls, continues to fall and moves lower than the low of the bullish engulfing here, all bets are off at that point. We're going to, continue to search for a bottom and keep an eye on these catalysts. Another bullish candlestick reversal signal would be something that we'll pay attention to. And if we see that with confirmation, that would be your signal there to go bottom fishing. And lastly, if I go into the VectorVest views and scroll us down to the strategy section here last night, what you want to pay attention to are the Derby winners. During the blast-off phase, you will likely see bottom fishing searches populate the one-day Derby winners list. Now, as of yesterday, we did see 2, bottom fishing by stop reversal and Pirates long. Those are 2 bottom fishing searches. When the market truly explodes off of a bottom, more times than not, you will see at least 4 or 5 bottom fishing searches in the one-day Derby winners. So that's another thing that we'll want to watch out for if we do get confirmation or if we do get follow-through here over the next couple of days. All right, folks, so make sure you stay tuned to the Daily Color Guard Report next week. This is a very important time here to pay attention to our guidance. If we do see follow-through and bottom fishing searches in the one-day Derby list, our guidance will advocate to begin going bottom fishing again. Have a great weekend, everybody, and we'll see everybody soon.